London just by the skin of our teeth.
James, finally a close up above 5,000 points, so coming in at 5,001 points. And that's the first time we've seen a close above 5,000 points since the 23rd of May, so in 42 sessions. And in fact, in 3 of those sessions, we've actually seen the market trading above 5,000 points, only to close below there. If we have a look at the intraday graph, though, not a very convincing close. This is the intraday graph of the Australian share market. I've just drawn a line at that 5,000 points, and you can see just on the close there, we managed to get there. The key here technically is the next couple of sessions. Today wasn't very convincing, and it was on light volume, so really we're watching for a follow-up for the Australian market to be able to maintain this level above 1,000 points from a technical viewpoint. In fact, if we have a look at the last 30 days of the Australian share market, this is what it looks like, and you can see that 5,000 point mark. We have broken it a few times, but quite unconvincingly. So this is the 4th time now that we have seen a break above that 5,000 point mark during a session over the last month, and really we want to maintain that. I guess one of the interesting things happening on the Australian market today, though, is that it was those growth areas which outperformed. That's the energy sector, the material sector, and the consumer discretionary sector. And this is a trend that we have seen throughout the past week. So it does look like investors really reallocating more money to some of the growth areas of their portfolio rather than the income side. So it does look like a developing trend there, and one that we're keeping a close eye on. Also gold, we saw the gold subsector jumping a massive 8%. We saw a huge amount of short covering coming in on gold on Friday. In fact, I think it was around about 12% of shorts being covered there, and that was quite an explosive move. So that really helping the gold sector in terms of the market, but very light volumes, under $3 billion being traded. And I guess also keeping one eye on Japan, where we did see Shinzo Abe's party winning the upper house, which means that Japan will probably see some pretty big structural reforms coming through, which should be good news for their economy.
Today, Julia, I think they closed up about 3.8, 3.9%. Your thoughts on this stock?
This is really quite unusual. Aquila came out with its quarterly report, and I guess the thing about Aquila is that there's no operating mines at the moment, so they only hold assets which are involved in the steel making process. So they're 100% ownership of the Washpool coking coal asset, and the 50% ownership of the Eagle Downs coking coal project, and then the 50% West Pilbara iron ore project. But of course, none of these are producing at the moment, and it looks like perhaps just the fact that Aquila has released this quarterly report may have just put a bit more focus on Aquila Resources. And one of the things with Aquila which is interesting is that it has a very strong balance sheet. In fact, if we have a look at the cash balance, it's $600.5 million at the end of the quarter that they've just reported, and that's on a stock with a market capitalization of $900 million. So their cash backing is about 2/3 of the market, their market capitalization, and that's not even including the assets that they hold. Of course, in terms of the picture for the coking coal story, it's a little bit more difficult. Coking coal prices around about $135 US a tonne, so down about 40% from a year ago. And we know that major companies are still shutting down in terms of their plans. We've seen ArcelorMittal as well as POSCO in India last week shutting down about $12 billion worth of steel projects. So that's still having an impact, but in terms of Aquila, that cash balance, quite attractive, even though perhaps the asset prices of some of the commodities that they're looking to develop in the future are maybe not so attractive at the moment.
The production reports roll on this week. Julia, Fortescue coming up. What are you expecting?
I guess no huge surprises are expected here, given that we did see Fortescue coming out to downgrade expectations back in June and predicting 80 to 82 million tonnes being for the full year. So that means for the quarter we are expecting between 24.1 to 26.1 million tonnes coming out. We will be watching the FY14 forecast. They stand at 127 to 133 million tonnes at the moment. Now Fortescue has guided at the lower end of the cost guidance, which is between $40 to $50 a tonne. And that's because there is a focus on cost cutting at the moment, as well as the ramp up of Solomon. One of the things the market's going to be watching closely are any details around the sale process for the Pilbara infrastructure, the stake that Fortescue is looking to sell. Of course, Fortescue is looking to retain control of those assets while getting someone else to pump in the capital. So that might be a little bit more difficult than what the market is watching for at the moment. So watching for details on that sale process, how it's proceeding, and also an update on FY14.
Fantastic. Julia, as always, great to get your analysis. We'll